Ladies and gentlemen, good day and welcome to the Q3 and 9 months FY22 earnings conference call of Trip Planners Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. And now I hand the conference over to Mr. Prashant Pitti, co-founder and executive director of Trip Planners Limited. Thank you, and over to you, sir.
Hello and good afternoon, everyone. Today on the call, I'm joined by Mr. Ashish Bansal, Chief Financial Officer, Mr. Hemang from our IR team, and Orient Capital, our investor relationship partners. We have uploaded investor deck and business highlights on the stock exchange and company website. I hope everybody has an opportunity to go through this. As you all are aware, 2021 witnessed the travel and tourism industry all over the world, battered by the effects of multiple pandemic waves. However, despite the challenges faced during the pandemic, Easemytrip has showcased consistent profitability and growth, which is a testament of the company's resilient new business model, strong fundamentals, and increase in operational efficiency during the period. In the intensely competitive and well-funded travel industry, our continued focus on delivering customer value while ensuring cost efficiency has enabled us to be the fastest growing travel portal. In line with our strategy to develop a complete travel ecosystem, we have made acquisitions of Spree, Traviate, and YOLObus, which is a premium intercity mobility platform. These businesses are in the initial stage of growth and have a long runway considering the opportunity in the underserved travel industry in India. YOLObus is revolutionizing bus service in India by providing clean, safe, and comfortable, seamless intercity travel and has an asset-light business model and works with bus operators pan-India. We have entered into definitive agreements with YOLObus to acquire the brand name, technology, running business expertise, data, and the team of YOLO Travel Tech Private Limited, operating under the name of YOLObus. The company will leverage YOLObus's full-stack technology-enabled platform, its team and data expertise, and will provide enhanced and superior bus travel experience. Spree Hospitality has established footprint of 1,220 operational keys across hotels in major cities of India. We have recently acquired 100% share capital of Spree Hotels, which was founded in 2011. The company is debt-free, cash-rich, and follows asset-light business model, which has enabled it to record profitability even in pandemic-struck years. The said acquisition will add new revenue streams, and it is a part of Easemytrip's efforts to aggressively expand the non-air segment. We have also taken various initiatives in this quarter to strengthen and garner growth in existing businesses. Some of these include full refund medical policy, special airfare discount on waitlisted train tickets, partnership with SpiceJet, exclusive deals with Flybig, and first ever brand ambassadors for nationwide brand campaign. We are proud to inform you all that we have appointed ace actors, Mr. Vijay Raj and Mr. Varun Sharma, as brand ambassadors. This is the first time where Easemytrip has appointed any brand ambassador. The actors, with their mass appeal and strong connect with the audience, will complement the brand image of Easemytrip. We believe Easemytrip has revolutionized online travel by introducing initiatives such as hassle-free booking experience, zero convenience fees, and full refund due to medical emergencies. Is now the right time for us to let more people be aware of such initiatives by Easemytrip through our brand campaign. Let me speak about our performances and highlights for the quarter. We had a remarkable quarter 3 result with a profit jump of 84% year-on-year and 49% quarter-on-quarter to 40 crores, against the net profit of 22 crores corresponding to the last fiscal year. Further, for quarter 3, our GBR, which is gross booking revenue, stood at 1,293 crores, which was up by 65% on year-on-year basis and 44% on quarter-on-quarter basis, generating strong and sustainable growth for its shareholders. Consistent performances across businesses, continuously gaining market share, basis increased margin and commission, and enhanced operational efficiency enabled us to perform exceptionally on the operational front as well. Our air segment grew by 49% in quarter 3 and 87% in 9 months. We have been able to sell 50.3 lakh air segments in the last 9 months. We have witnessed strong demand with our constant customer engagement, customer acquisition, and focused marketing initiatives. We have been able to inch up our marketing share in air segment considerably. Our hotel nights sold has seen a jump of 144% in quarter 3 and 357% in 9 months on year-on-year basis. Our hotel room nights sold for 9 months was more than 1 lakh as compared to 22,000 for the 9 months of FY21. We have achieved new heights for our hotel night booking segment in 9 months of FY22, and we are confident of future growth in this segment with our competitive pricing and wide across hotel offerings. Our train, bus, and other clubbed together services grew by 262% for the 9 months and 162% for the quarter 3 on year-on-year basis. Given the recovery in travel and tourism sector has enabled the high growth in bookings in train and bus segments. Let me speak on the financial performances for 9 months of FY22. Our gross booking revenue for 9 months of FY22 stood at 2,544 crores as compared to 1,221 crores for 9 months, which was up by 108% on year-on-year basis. Our adjusted revenue was 302 crores, which was again up by 208% on year-on-year basis as compared to 98 crores for the 9 months of FY21. Again, our profit after tax stood at 83 crores for the 9 months as compared to 31 crores for the 9 months of FY21, which was up by 167% on year-on-year basis. We continue to focus on increasing our revenue and market share. Alongside, our equal efforts are distributed to operational efficiency and cost management. We will continue to do our business at lean cost model and remain profitable and increase profits in consistent basis. Despite increase in adjusted revenue by almost 208%, our costs have been under control. Our other expenses stood nearly the same at 1.2% of our GBR as what it was in 9 months of FY21. Our employee expenses as a percentage of GBR was 0.7% for this 9 months as compared to 1.2% for the last fiscal year. Our marketing and sales promotion as a percentage of GBR was 0.9% for this 9 months as compared to 0.8% for fiscal year 21. We are doing multiple tie-ups with various brands to cross-sell each other's products and leverage brand strength for both the parties. We are also engaging with multiple companies to provide additional benefits to the customers for engaging them and bringing stickiness to our portals. We will continue to strengthen our non-air business, international footprint, and continue to create long-term sustainable value for our shareholders. With this, I'd like to open the floor for discussion. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Praveen Sahai from Edelweiss Financial. Please go ahead.
Yeah, first of all, thank you for taking my questions. And congratulations on good set of numbers.
Praveen Sahai, your line is in talk mode.
Am I audible? Hello? Hello?
Praveen, if you have muted yourself from your handset, kindly unmute yourself and please proceed with your question.
Hello?
As there is no response from the current participant, we move to the next question from the line of Jimesh Sanghvi from Jimesh & Company. Please go ahead.
Hi, sir. Can you hear me? Hello? Hello? Sir, can you hear me? Hello? Hello?
Yes, sir. Please proceed.
Yeah, sorry, sir. Sir, couple of things. If you can share the number of the claims written back this quarter. Probably you used to share this earlier, but haven't shared in the presentation this quarter. So if you can share that number. Second is if you can share the revenue of the hospitality business, this hospitality, and the profitability that we have that has been reported. I guess this quarter from December 1st or 10th, that part of revenue and profitability has also been included in the quarterly financials. So if you can share some numbers out there, and also the acquisition cost of this particular business, and for the YOLO bus as well, if you can share the revenue, profitability, and the acquisition cost.
Okay, so there are multiple questions that you've asked. First is about UAE. So the company has reclassified the income from unexercised rights, which are non-refundable in nature, from other income to the revenue from operations. Since it provides more reliable and relevant information to the user. So basically, since it has been reclassified, it is a part of revenue from operations from now onwards, which is basically the standard practice, which is also adopted by our competitors. So it comes as a part of revenue from operations from now onwards. We have not disclosed the numbers separately in our financials as the practice which is followed by the competitors. The second question was related to the Spree Hospitality. We acquired Spree Hospitality for 18.25 crores put together, and the net contribution from Spree Hospitality, if I'm remembering correctly, is somewhere around 1.2 million rupees for the month of December as a positive. So it's a profitable company which basically is making profit, and the next contribution from that is somewhere around 12 lakh rupees for the month of December, since it started from December onwards. For the YOLO, we have not disclosed the amount for acquiring their brands and rights, but we are really looking forward to grow YOLO alongside, since there's a huge pent-up demand on the bus side. And if you see on the overall basis, for all the intercity travel, around 55% of intercity travel happens via bus, 40% via train, and remaining 5% is basically via airplanes and private vehicles. So there's a huge opportunity to revolutionize the intercity bus travel, since it's a majority profit. YOLO bus is basically using its technology, using its cutting-edge innovation, and using its platform. It's basically changing the bus services across India, and we're looking forward to doing along with it.
So by when can we expect this particular segment to kind of get merged, or probably the deal to get consummated?
The deal probably should be consummated within a month's time.
Okay. And any sense that you can share if it will be a cash deal or it will be a share swap or something of that sort?
It will be a cash deal.
And any revenue numbers that you can share for this particular business?
Not at the time.
Not at this point of time. Fine, sir. I think that's... And the claims number you won't be sharing going ahead, right?
Correct. Now it has become part of our revenue from operation.
Okay. And how do you see...
Mr. Sangvi?
Yeah.
So sorry to interrupt, but for any follow-up, maybe request you to rejoin the queue.
Sure. No problem. Thank you.
Thank you.
The next question is from the line of Saurabh Shah from AEM Advisors. Please go ahead.
Hello. Am I audible?
Yes, sir. Please proceed.
Yeah. Hi, sir. Congratulations on a good set of numbers. There are a few questions that I had. Firstly, on Spree, did we also, does Spree have any assets on its book in terms of the hotels that it manages? Or is it purely an asset-light model?
It's a purely asset-light model. There's no asset which is.
Okay. Secondly, in terms of what would be the cash on books and how much advances would be with the airlines in terms of other financial assets?
So we disclose our balance sheet and cash flows on every half-yearly basis. So the number which we have disclosed in quarter 2, I think that's the same number which we would be able to share that.
Secondly, our revenue from operations net to gross booking revenues has improved to 6.7% in the current quarter. So is this because that we have more advances with the airlines and are they giving us better rates?
Not necessarily.
Sorry?
Not necessarily.
Okay. So what has happened since our percentage to GBR has increased for the current quarter? Why?
So basically, our mix also is changing. We are gaining more businesses in hotels and other services. And as the mix changes, our overall revenue from operations, margins also tend to improve.
So since I guess in compared to the last annual report, it was around 5% from hotels and other bookings and 95% from airlines. So what would be that mix currently?
I could share the numbers on the absolute number, but on the basis of percentage of total business, it probably would have improved by a percentage or more.
Okay, can you just share it?
As I said that our total business has increased, the bookings have increased by 144%. On the absolute number, I don't know the number on how exactly the shift has changed, and we are not reporting it in this quarter.
Okay.
Thank you.
Thank you. The next question is from the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
Hello. Yeah, sir, thanks for the opportunity. My first question is, in the hotel segment, in bookings, if we talk about, this number is 42,800 versus 50,000 quarter on quarter. Any specific reason why this came down on a December versus September quarter basis?
Well, thanks to the third pandemic, which was lying over, I think that is why there's been some number changes in the December month. And however, in the last couple of weeks, we are seeing a very strong recovery, which is coming from the third wave.
No, so this is the impact of third wave you mentioning, the dip?
You said that the December numbers might be slightly lower.
No, I mean the December quarter number, which we have reported in the presentation as 42,800 versus September quarter number was 52,000 for the bookings in hotel segment.
So okay. I thought
around a 20% dip.
Sorry, I thought that you meant specifically for the December month as a booking. So there have been a couple of reasons. One is, of course, the demand is also one of the reasons. We saw strong demand coming on the quarter 2 side versus quarter 3. And the second reason is also we have also rationalized the discounts which we are giving on the hotel side, because of which there is a small dip, and also the December month we saw the bookings slightly to be on the lower side compared to what we saw in the month of October and November.
Okay, and how in general has been the impact of phase 3 on the overall travel business of yours, air and hotel altogether?
So the impact has been pretty minimal when you compare the impact of wave 1 versus wave 2. I think people have started living up with this pandemic, and we are looking forward for this to be the last wave as what we are witnessing right now. And I believe the impact was much short-lived compared to what the impact was for the wave 1 and wave 2.
Okay, and when we like this GBR number of for the quarter what we have reported, is this the highest quarterly GBR we have had, or because we don't have long history of quarterly numbers, so that's why I'm asking. So this 1300 crore of GBR number is the highest quarterly number?
That would be correct. Yes, I think that this is probably the highest ever GBR number which our company has reported.
Okay. Sure, sir. I'll get back to you. Thank you.
Sure.
Thank you. The next question is from the line of Praveen Sahai from Edelweiss. Please go ahead.
Yeah, thank you. Am I audible?
Yes, now you're audible.
Yeah, so my question is related to the booking volume. So if I look at a booking volume on the sequential basis, it's around 32%. And if I look at your competition, it's even better than that. Even the DGCA data, if I look at that, is a 62% of a growth. So whether is there any market share loss, or what exactly to read out to this number?
So our competitor, probably the number which you're comparing is probably for all their segments put together. If you compare just the air segment, I think we are holding on to our market share very strongly. Our market share currently should be somewhere up to north of 10%.
Volume only. For both the companies, air ticketing only, and that's why referring to the DGCA group.
Your voice cracked in between, Praveen.
So I'm comparing air segment volume only, which you also provide, and your leader also provide, the sector leader, and that's why the DGCA I had compared. So DGCA had given 62%, and just to give you a number for MMT is a 41% sequential, and your number is a 32% sequential. So just to get a more...
DGCA basically reports number on the basis of passengers flying, while we all report on the basis of passengers booked. So there's a difference on that side. It's not direct apple to apple comparison.
Okay, got it.
And given in the times where things are changing so dramatically, there can be a huge difference between passengers flying versus passengers booking.
Okay, got it. So, and the second thing, as you had said, that the Q3 FY22 gross booking revenue is the highest. Can you give any color on the Q3 FY20? What was that?
It's a comic number. Ashish, would you remember what was the number for FY20 of Q3? For FY20, not for FY21. That's what you're asking, right?
Not 20. So pre-pandemic number, I just wanted to know.
So I think it should be in the order of somewhere around 1,000 crores, if I'm not mistaken. Our Q3 number for this year is 1,293 crores. For last year, Q3 was 782 crores. I think pre-pandemic, that number somewhere should be in the tune of somewhere around 1,000 crores.
Yes, actually we don't report quarterly number of that period, so we don't have right now.
Okay.
FY20.
Okay. The second question is related to the advertisement expenses. For the third quarter, we had seen an increase in that. So, and also you had announced during the quarter the brand ambassador, appointments. So, is there any cost related to brand ambassador also included in this quarter? And also, if you can give some highlight how much you had paid for the brand ambassador and what's the timeline for them?
So, I don't think that we have made that numbers public. However, yes, the amount which is paid to the brand ambassadors is included. The deal which we have signed up for them is for 2 years. So the amount which is paid is for actually 2 years. But yes, you are absolutely right. That number has come in this particular quarter in entirety. So, you will have to amortize it for the next 2 years as a part of the deal.
Okay, fine. And lastly, on the as you had mentioned that the business mix has changed, and that's why your percentage net revenue as a percentage of GVR has been improved. But if I look at your net revenue, which is around 87 crore, 86 crore is from air passenger only. So the most of the revenue is from the air passengers. Then as a percent of GBR increasing to 6.7%, how is the product?
For the last quarter, as a percentage of GBR, it was 6.3%, and now it is 6.7%. So to be honest, the percentage difference is not as much. And I wouldn't want the question basically asked was it related to us giving more advances to the airline? The answer was no. In fact, I think the advance deposits probably would have decreased by a bit during this quarter to the airline. And overall, the efficiencies of the companies have improved. The margins which we are getting from the other sources have also improved. So if you see the revenue from operations last year from the hotel segment was slightly negative. And this particular for the last quarter, I think. For the Q3 quarters, I'm not sure. Ashiji, would you remember the number? How much was it for the hotel segment?
Hello. Yeah. Which number? Yeah. Hello.
For this quarter, Ashiji, how much is the net number which we have reported from the hotel segment?
Your voice is cracking actually.
So I got your answer. So basically, I just trying to understand that's an increase in 6.7% from 6.3% or back in a year, same quarter, 5.6% was the percentage of GBR net revenue. So
we continue to enjoy good margins which we are getting from the air segment and the hotels and the other. That continues to go over there without giving them more advances. That was the answer actually.
Okay. And can you able to give the total borrowing in the company right now, end of December?
Ashiji, would we be able to share that number?
No, we have not reported that number, but there is a reduction in the borrowing. And also it is not the borrowing, it is the FD or the facility which we have taken. There is no clean borrowing in the company.
Okay. Thank you. I'll come in.
Thank you. The next question is from the line of Jeetu Punjabi from EM Capital Advisors. Please go ahead.
Hi, Prashant. Hi, good numbers. Chagvit, so two broad questions, right? If we're looking out over the next year or two, what percentage of top line and bottom line will be added from these acquisitions? How significant, how relevant are they in the overall scheme of things?
Mm-hmm. So we are in the process of acquiring 3 companies, and we believe that there are 2 more which are coming. And put together, we believe that they should be substantial part of our businesses and strengthening our non-air particular verticals. So we look forward to them to add, in a positive terms to the cash flows and to the balance sheet of the company.
So would it be fair to say there'd be more than 20-25% of both top line and bottom line a year from now, if I take all the acquisitions together?
Since many more acquisitions are pending, it would be hard for me to comment on the percentage impact which it would make on the company level, but we are looking forward for it to be a significant.
Okay. The second question is, we're seeing early signs of a big travel boom, after people have been locked up for so long. So your sense on how you are expecting this to play out, what would the implications be, and would there be anything you'd be doing differently to ride on this?
So there are a lot of things which the company is doing right now. There are a lot of innovative products and features which are upcoming in the next quarter or maybe in the next half year. Of course, pandemic has changed the way people travel, and we totally accept it. And we are also working on the anticipation of how people would like to use our services in the future. And we are on the top of the thing to ensure that whatever customer requires is provided by Easemytrip. We are also very hopeful for the pent-up demand which the last 2 years have created.
Device disconnected.
Am I not audible clearly?
Say you're audible, please proceed.
Okay. So we are also really looking forward to the next couple of years as the pent-up demand which the entire industry is experiencing right now. And we are anticipating that this pandemic might be coming to the end phase as the entire scientific committee is also suggesting. We're looking forward to reap the benefit for the lean, efficient organization which we have created and grow much faster in the future.
But I mean, just ballpark, would you say that a 30% growth of the next year is a reasonable number to work with?
If there is no, further, waves which, I don't know how the world will look like a year from now, but if there are no significant disruptions as what we are anticipating, I think 30% should be an understatement.
Okay. Chalo, super. Good wishes, Prashant. All the best. Take care.
Thank you. The next question is from the line of Gautam Kotagiri, an individual investor. Please go ahead.
Hi, good morning all. So my first question is about acquisition of Spree Hospitality. Easemytrip is largely into ticketing business, and while Spree is into managing a hotel, if I understand correct. So how do you think we can leverage the competencies here? And what is the advantage we're looking while acquiring Spree? And second question is about, can you just tell me what is our market share in the air ticket booking?
Okay. To answer your first question, there are a lot of synergies which we saw while acquiring Spree. First is that Spree holds somewhere around 1,200 room keys, and they are looking forward to grow to 5,000 room keys in the next 3 years. Now, to help them grow, at Easemytrip, we know where all people actually want to stay because they search that on our platform. So we can make better and smarter decisions for Spree. The way Spree can help Easemytrip is that we are creating bundles. See, unlike our competitors, we do not want to pre-purchase any hotel inventory. We want to remain an asset-light company. And now, Spree basically using Spree, we can basically create bundles on our website on Easemytrip. So basically, if somebody is buying an air ticket from Delhi to Bangalore, we can ask them to just add the Spree hotel, we have a couple of hotels in Bangalore. Just add a room night in Spree by adding 2,000 rupees into the bundle. And people could use it. And Spree basically works primarily on 3-star and 4-star hotels, which is actually exactly the kind of clientele which we are catering to. So using their inventory without even pre-purchasing, we can create bundles and have a surety on the room's availability side. And the second question which you asked was related to the market share. As I said earlier, our market share on the air side should be a little bit up of 10% right now.
Sure. Thank you.
Thank you. The next question is from the line of Saurabh Shah from AEM Advisors. Please go ahead.
Hello, sir. You said about the market share. Is it about 10% is what you said?
That is correct.
Okay. And in comparison to Easemytrip, how would we stand? Like every quarter we give a number?
So, they are also a listed organization. Please feel free to check their financial statements. We are a growing company. We have been growing at the fastest pace. From FY18 till FY20, we grew at 47% on CAGR basis. And we are continually growing and gaining market share. Our market share about a year ago should be somewhere around 7.5 to 8%, which is at north of 10% right now on the total air ticket sales. I wouldn't be able to make a specific comparison with anybody right now.
Sir, who would be number 3 in the industry after that in terms of OTAs?
Sorry, the voice.
Who would be number 3?
So I'm not in position to answer who's the number 3 or who's number 4. We are the second largest travel portal right now, is what I will be able to say.
Okay, thank you.
Thank you. The next question is from the line of Madhuchanda Dey from MC Pro. Please go ahead.
Yeah, hi. I have 3 questions. The first is you have already done 3 acquisitions, and as you mentioned that you're looking for more. So what kind of a payback that you are typically looking at when you are doing an acquisition? And the second question related to acquisition is, how many employees did you onboard because of this acquisitions, and how much of that is a part of your employee expense in the quarter?
Okay. So thanks, Madhu. Thanks for asking this question. At Easemytrip, we are not looking exactly at the payback structure while acquiring companies. We are looking for great synergy and great operational efficiencies for the companies in the travel segment. So wherever we are finding good synergies and wherever we are finding the companies which are run somewhat like Easemytrip with great operational efficiencies and a good market opportunity lying ahead, we are working towards them to acquire them. The three companies we have acquired are exactly the same. All three of them are operating in very lean cost structures, but are doing wonderfully well, are growing their businesses. Some of them are profitable, some of them are almost at the break-even stage, and we are looking forward to grow along with them. So that's the kind of thought process while we are acquiring organizations. It's not necessarily related to the payback. What was your second question, Madhu?
It was how many employees did you add because of this acquisitions, and have you?
At Easemytrip payroll, we have a couple of people who are on the M&A side. The companies which we are acquiring, their employees are coming on our subsidiaries payroll, of course. So that is why you see that our employee expenses have jumped from 5 crores a quarter to 6.9 crores because the employees from the other side are also coming onto the payroll of Easemytrip. However, they are still maintaining cash profitability on their own internal books itself. So on the Easemytrip side, I think the number is fairly minimal, as we have hired only a couple of people who are working on the M&A side.
No. My question was, how many people did you add because of the acquisition?
So I think from the screen side, the numbers in the consolidated side, only the screen numbers are added so far. And I think somewhere around 40 to 50 employees must have been added.
Okay. And my third question is a little long-term one. So maybe in the next 3 to 5 years, as of now, you're kind of a completely air travel booking company, bulk of the revenue coming from there. So maybe 3 to 5 years down the line, given your strategy, how do you see the mix changing? I mean, if you could just throw some ballpark number.
So yeah, maybe I can share some guidance. See, what all do we want to be from 3 to 5 years? At Easemytrip, we are already a profitable organization. One of the very few new age startups who has been delivering consistent profits, right? So the base is absolutely right for us. The systems which we have set up, the systems which we have enabled in the last 13 years are definitely helping us in grow in other verticals as well. But for the very first time in the last 6-7 months, Easemytrip has started acquiring companies and grow inorganically as well. So we are looking forward to grow both organically, and our organic growth on hotel, bus, train, holidays is also going marvelous. While we would look forward to grow even faster by growing inorganically, and in the next 3 to 5 years, we want to become the leader in travel industry and not just create a platform, but also create the entire ecosystem on the travel side. So there are a lot of good companies in the travel space which have been slightly underserved by the market, specifically because I think the travel trade is one such trade where people have not been able to deliver to the shareholders in the past, because of which there are a lot of good travel companies which also went a little bit unnoticed. And at Easemytrip, we are basically taking that as an advantage and are identifying good travel companies to acquire and work around with them and grow for the next decade.
So I'm sorry to harp on that point, but what percentage, maybe at 3 years down the line, should come from non-air ticket revenue?
So see, our air revenue is also growing, right? And we expect our non-air revenue to grow, to develop every year, at least develop organically. And inorganic growth could be as much. There is no limit to that, right? On the inorganic growth. So we're looking forward to change our mix very significantly, but not at the cost of being a loss-making organization. I think I may have clarified this multiple times in the call, and I'd like to reiterate the same point. The company's DNA is to basically be very operationally efficient and run company profitably, and that DNA will continue for the future as well.
Okay, thanks and all the best.
Thank you. Thank you.
Thank you. The next question is from the line of Manish Mundada. an individual investor. Please go ahead.
Hello. Am I audible to you?
Yes.
Yes, sir. Please go ahead.
My first question is that we have reported a 60% operating margin. Will we be able to maintain that margin in the coming quarters? And my second question is that I have used both the apps, Easemytrip's mobile app and GoIBO's mobile app. The GoIBO's mobile app is much better compared to our app. So are we working in that front?
So Mr. Manish, so basically I remember your second question right now. I won't be able to share any comparative of how we are compared to the others. Our usage is increasing, our total GBR is increasing, our profitability is increasing. We are working towards whatever, small work which we have to do further. We are working on that. And many things which probably we have which others don't have. If you closely look and notice. What was your first question, Manish? I'm forgetting.
The operating margin is 60%. Will we be able to maintain that margin in coming quarters?
We do not see any change as of now, right now. It's a business, right now, whatever we are doing is the status quo.
Okay. Thank you and all the best.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. As there are no further questions, I now hand the conference over to Mr. Prashant Pitti for closing comments. Over to you, sir.
Sure. So to conclude, I would like to highlight that zero debt and cash surplus, standing presence in hotel and holiday segments through acquisition, growing network of travel agents, and focus on developing in-house advanced technology and infrastructure and software, we believe we are well positioned to capitalize the growth opportunities and increase profitability in the future. Thank you everyone for joining us. I hope we have been able to answer all your queries. In case if you have any further details or questions, please feel free to contact us or Orient Capital, our investor relations department. Thank you everyone for joining. Wish you all to be very safe during the pandemic time. Thank you.
Thank you. Ladies and gentlemen, on behalf of Trip Planners Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your line.